We'll move on now to the U.S. West Stock Index. Futures wavered ahead of Thursday's open as investors turned their attention to fresh economic data. Around 5:40 a.m. Eastern Time, Dow futures slipped 4 points but indicated a positive open at 22.41 points. The Nasdaq and the S&P 500 futures indicated a flat to upbeat start to their respective trading sessions. On Wednesday, a Trump administration official stated that the government will rely on the U.S. Committee on Foreign Investment to take care of matters concerning foreign purchase of domestic technologies that are deemed sensitive. Meanwhile, economic data and corporate earnings due include a real gross domestic product data at 8:30 a.m. Eastern Time, jobless claims also due at 8:30 a.m. Eastern Time, and the Kansas City Fed's manufacturing survey at 11 a.m. Eastern Time. Looking to the corporate space, Accenture, Walgreens Boots Alliance, Nike, and KB Home are all expected to publish their latest earnings results. And in Asia, stocks closed lower today with China markets falling back into negative territory. In Tokyo, the Nikkei 225 was little changed, finishing the day lower by 0.01% at 22,270.39. The Kospi declined 1.19%. On the mainland, the Shanghai Composite fell 0.97%. And the Shenzhen Composite tumbled 1.19%. Hong Kong's Hang Seng Index, however, was up 0.42%. The S&P ASX 200 in Australia reversed course, advancing 0.31% to close at 6,215.40. And away from the markets and back here. Nigeria plans to raise $2.8 billion of debt offshore as part of its 2018 budget and will explore all options to lower costs. The debt office has sent a request for a proposal to banks for an international bond offering. The government has laid out plans to borrow abroad, even though interest rates are rising in the United States, which could see the West African country pay a higher premium on this occasion compared with its most recent debt sale in February. Nigeria, which left recession last year, approved a 3-year plan in 2016 to borrow more from abroad so that 40% of its loans would come from offshore in an attempt to lower borrowing costs. It now has around 23% of its debt from abroad, up from 16% when it approved the plan. And Egypt is considering tapping the international sukuk market in the coming fiscal year as it looks to diversify funding sources to drive forward its economic revival efforts. The Sharia-compliant issuance, either in dollar or euro-denominated sukuk, which Finance Minister Mohamed Maiti hopes will happen in fiscal 2018-2019, would mark a revival of a plan shelved since 2013, when the government under then Islamist President Mohamed Morsi issued the law to pave the way for the country's first Islamic bond. Amid the government selling more than $13 billion in conventional bonds since the currency flotation, interest rates falling, and attempts to push the economy forward by diversifying fund and investment sources, Egypt is looking towards long-term debt and the Sharia-compliant bonds market. And troubled retailer Steinhoff is seeking a further 3-week standstill from creditors on its debt obligations as a financial restructuring nears agreement. Earlier this month, letters of support were agreed with several creditor groups, including a group representing 61% of the external financial indebtedness of Steinhoff Europe. A majority of the total convertible bonds issued by Steinhoff Financial Holdings Corporation and creditors to certain group companies to which SEAG and Holding are indebted through intra-group financing arrangement. The company is now seeking a further short extension until July 20. And Britain's Competition and Markets Authority has given its unconditionally clearance to minor Simbai Stillwater's proposed takeover of Lonmi, saying it would not refer the merger for a second phase investigation. The South African precious metals miner made an all-share offer for London-listed Lonmi in December in a £285 million deal to create the world's #2 platinum producer. And Ghana's economy grew 6.8% year-on-year in the first 3 months of 2018 compared to 6.7% in the same period last year. The quarter-on-quarter seasonally adjusted growth rate was 1.5% down from 2.1% in the last 3 months of 2017. Ghana, the world's second largest cocoa producer and Africa's second biggest gold exporter, currently produces around 180,000 barrels of oil per day from 3 offshore fields, including its flagship Jubilee Block. A team from the International Monetary Fund, in the meantime, recently visited the country to discuss recent economic developments and the outlook for the remainder of the year. The IMF says the country's macroeconomic stabilization is ongoing. Growth prospects remain positive, supported by strong oil production. Investor confidence has improved, as indicated by a successful issuance of the Eurobond in May 2018. In the meantime, the Executive Board of the International Monetary Fund will examine debt-crippled OPEC member Congo Republic's request for a bailout on July 6. Like other Central African oil producers, Congo has been hit hard by low crude prices and is struggling under the weight of over $9 billion in debt, equivalent to around 110% of its gross domestic product. Following a mission to Congo in April, an IMF delegation said it had reached broad understandings on policies it could support within the framework of an arrangement under the fund's extended credit facility. However, before it could submit a deal to the board, the delegation said Congo would need to fulfill conditions including making progress towards restructuring debt the fund considered unsustainable. Congolese authorities are currently in talks with creditors, including trading houses Trafigura and Glencore, from which it has borrowed around $2 billion. And the International Monetary Fund has approved $24 million for Guinea to support the economy of the bauxite-producing West African nation. Guinea, whose economy has been hit by low global commodities prices, reached a deal with the IMF in December, giving it access to $650 million in non-concessional borrowing under a 3-year extended credit facility running from 2017 to 2020. The IMF program aims to help Guinea, Africa's top producer of the aluminium ore bauxite, boost spending on infrastructure projects. And still to come, commodities market update with a focus on onions.